Good morning. I'm John Janarone, editor-in-chief of IPO Edge. Very happy to be here with a fireside chat, and we have CEOs of both Golden Matrix and Meridianbet. So that's Brian Goodman, who's the CEO of Golden Matrix, and Zoran Milosevic, who is the CEO of Meridianbet. The two companies have recently merged, are now trading on NASDAQ under GMGI. I can't wait to introduce the guest. Before I do so, I just want to remind everyone we encourage you to ask questions, so please do so right there on your Zoom terminal, your portal, and we'll get to those in the second or last 15 minutes of the program. Additionally, we will post a replay as well as some highlights the next day or so. Those are most easily found on ipoedge.com. You can also find it under the GMGI ticker on your Bloomberg terminal or on Yahoo Finance. With that, I'm going to pass the baton over to Jared. Oh, no, I'm not. I think we have a video here. Jared, do we have a video to play? Here we go.
All right, fantastic. Good morning to both of you. Brian, perhaps we'll start with you. Give us a quick overview of Golden Matrix and maybe a little bit about your background.
I think Brian's muted there. Brian, can you?
Thank you. Yeah, I'll give you a brief background, and I think because it's a fairly interesting story, and the company was only started in 2016, but my background is a lot longer than that. I'm one of the original, call it, online gaming operators been in this industry for over 20 something years. But as Golden Matrix, we started out, we were an obscure pink sheet company, and our share price, I think, was around 4 cents. We brought in some amazing technology, and we believed from the outset that we would build this amazing company. And we put together a plan, and since then we've managed to deliver and build shareholder value along the way. And we started off as a B2B provider, and in a way we replicated how people run bricks and mortar businesses in an online world, and gave people who in bricks and mortar operations an opportunity to transition to online, and in so doing, obviously we provided this pathway for them to get out there. Right now we have over 650 casinos that operate on our systems, and we also have a very interesting tournament platform in the UK that's grown considerably and offers also huge value to the company. It accounts for over 50% of our turnover now, and more than 50% of our profits, and we'll talk more about that a little later on. But yeah, as I said, started off at 4 cents, told everybody we were going to get onto NASDAQ, and everybody thought that I'd lost my mind, and this was an impossibility, and on top of that, also told them that we were going to build a considerable company in terms of value, not only for as in the market cap, but in terms of value for those shareholders that came in at an early stage, and as you can see, we've managed to achieve a large part of that, and we continue to scale this company and to build value, and that's pretty much where we're at. We got onto NASDAQ, and recently we acquired Meridianbet, and so that's our story in very briefly.
Great. Now there was a nice photo of you ringing the bell there at NASDAQ we saw in the video. Zoran, same question, a little bit of your background, and tell us about Meridianbet. You're on mute. There we go.
Thank you for the question. Thank you for hosting this interview. My name is Zoran Milošević. I'm the CEO of Meridian. Meridian is 25 years old company. I'm 20 years with the company. I started basically as a cashier in the betting shop, and over the years I moved through the ranks, and I was basically managing almost every single department in the company before I became CEO. I'm the CEO last 15 years, and in terms of myself, I'm hold a Master of Science degree in Industrial Engineering, and as I said, almost every single department except of legal and financial department, I was involved in that. Company is, as I said, founded 25 years ago, and we are sports betting and casino operator. Beside that, what is very interesting, Meridian is also a technology company, so whatever we deliver, we create. And this is 25 years of continuous software development. Currently, we hire approximately 1,200 people around the world. Out of that, there are 120, 130 developers, which are taking care of every side of our technology. So we are developing sports betting technology and also casino technology, casino back office, games itself, and so on. Of course, when we started, it was dominantly a retail operation, but very soon, in years 2003, 2004, we started the online operation. So basically, currently today, we operate in online segment, in retail segment. Online segment is approximately 70% of our revenues, 30% is retail segment, and online segment is growing much faster than retail. When it comes to split between sports betting and casinos, Currently split is approximately 60-40. So 60 is for sports betting, 40 is casino. And casino is also much faster growing segment than sports betting. And we expect that casino will overtake sports betting in 1 to 2 years maximum. So we will be dominantly a casino company. When in terms of business models, Meridian operates into B2C and B2B mode both. And it was in the beginning and up to, let's say, 6 to 7 years, our B2B segment was much bigger than B2C. And at some point, we operated in almost 35 countries worldwide. Currently, we operate in 17 different jurisdictions. But last, let's say, 6, 7 years, something before pandemics, we started to turn more into B2C because it's more profitable, but also B2B segment is here to stay, and we use it dominantly to expand into new markets. So in every new markets where we go, we first go with the B2B model, which is much cheaper and actually the best way how to explore the new markets with very few investments. And then if we decided that market is good and in terms of regulatory, customers, partners, and so on, then after several years, we tend to acquire it. So turning from B2B, getting into new markets on a B2B mode, and then turning it into B2C, that is our way of expansion. We deliver our services into 800 betting shops around the world. And we have approximately, as I said, 17 different online sites which we support.
Great. Before we get into the nitty gritty, Brian, perhaps you could take us through some of your numbers from last year.
Yes, Golden Matrix numbers, obviously pre-Meridian, because we acquired Meridian just a few weeks ago. So Golden Matrix would have done somewhere around $47 or $48 million in revenues, and roughly, I think, just under $3 million in EBITDA. And the good thing about the company is it's from the outset has pretty much been profitable, cash positive. We've never had any debt. So the company had a very strong balance sheet. And when I mentioned we went to NASDAQ, it wasn't that we IPO'd and got some banks to underwrite us. We naturally uplisted, which is very unusual. Most people are obviously IPOing, getting banks to underwrite them, and also some of them were using SPACs at the time. A lot of them were using SPACs at the time when we listed, but we naturally uplisted. And the reason for that is because we had a very strong balance sheet and very strong profitable history. And we knew at that stage that our core business grows. Our compound annual growth is extremely strong. But even then, we decided that we needed to scale. Once we got on NASDAQ, we were a micro cap, and you know, we realized that we need to become a small cap and continue to grow the company. And the best way to do that was to scale using acquisition, looking for suitable targets that we could acquire. Culturally, because both companies have always been profitable and cash positive, we would never buy into something that was burning money, losing money, or something along those lines. So really, what we're looking for are opportunities where companies are profitable and would add, would be accretive to our business.
That makes a lot of strategic sense. Tell us about the different brands that you operate, Brian.
So yeah, we have a B2B business, which is a system building business. It does anything from white labeling a casino from ground up in a turnkey type solution to an operator who wants to operate online, all the way to potentially just a module, a marketing module, a customer retention module, and that all falls under one division of ours, which is the B2B division, and we call it the GMAG system, which is our aggregate system. And within that system is third-party gaming content, and now we're lucky enough to have our own content because Meridianbet has its own content studio, which will add to our margins and obviously our profitability. But aside from that, we have a very interesting business that we acquired a while ago, which is a tournament business. And most people that come on the program or whenever I speak say, wow, what is this business? You've got Ferraris and Lamborghinis and you're giving away holiday homes. And what is this thing? Is it gambling? Is it a lottery? And it's a tournament business, and it's legal in the UK and Ireland, and we plan to roll it out into other countries. And it's a very profitable part of our business. And it's an interesting one because basically what it is a skill type game where you ask a question, somebody answers, and if they get the answer correct, then they can buy some tickets into this raffle, if you want to call it a raffle. And we have these high ticket items in the raffle, and then between 7 and 10 days is the period that the raffle lasts for each particular product. It can be small items, electronic items, Rolex watches, whatever it may be. And then we have a draw after a week, and a person wins the prize, call it the Ferrari. And then most people win a Ferrari or a Lamborghini, but actually when it comes to insuring the car and maintaining it, they're not really so happy to have the prize when they win it. So you can imagine we say, hello, Mr. Jones, you've won yourself a Ferrari. It's fantastic. It's a load of celebrations, but when they look to insure the car and service it, it's not such a lovely idea. And but then we have a plan where we offer them a cash alternative. So we give them cash in lieu of the prize, and we have another company that takes care of that falls within the public company, and it makes them an offer on the car, and they get cash for it, and then we take that car. But we never put the car up twice. So what we do is we take the vehicle and we resell it. Normally we sell it back to the dealer that gave it to us in the first place, because exotic cars are very rare. I mean, very difficult to come by. It's not as if you can walk into a Ferrari agency and take a car off the floor. So it's a very interesting business. It's something we're going to roll out. It's a fairly simple business to run, but we have the liquidity, and you need that because we guarantee the draws. Whether we sell one ticket or all tickets, those draws are take place every week or 10 days, like I say, and they're cash tournaments, they're cash prizes along the way. I think most of our tournaments, every 1 in 4 tickets have some form of a prize. And so, yeah, those are our two major businesses. And the actually really important part of that business is it recruits players at a very low cost. And in the online casino world, the most important component of any operating online B2C casino is the difference between your acquisition cost and your lifetime value of that player. So if you're spending $1,000 to acquire a player, and he only gives you $300 during his lifetime, you're digging yourself a hole in the ground, and ultimately you will burn some serious money, because the more players you get and the more money you spend, the less money you'll have. So we can acquire these players somewhere around the £2.50 mark is what we acquire a player for in the system, and that's very unusual. You would find, in America, I don't know what the numbers are, but they used to be around even $700, $800 a player to acquire. And you'd be lucky in some instances if those players were worth $300. So you can do the numbers yourself and work that out. But it's a very valuable tool, and we'll roll it out, globalize it, and we'll use the acquisition that it brings to the table to fuel other businesses. So that's
all right. Great. Tell us about your competitive moat and what you're doing different from competitors.
In terms of, I guess the way we approach the situation in the B2B business as I mentioned, we try and replicate this scenario whereby that operator was used to operating. So in a lot of instances, operators were using hierarchy systems, as in like agency systems. We call them kiosk systems in the industry, where they have a agent, sub-agent, sub-agents, and these people fuel their casinos by bringing players. Sometimes they call them affiliates, and they bring players to the casino and they get rewarded for it. In order to do that, you need specific systems, and now hierarchy systems are probably the go-to product in most parts of the world, and people understand that without those systems, they can't fuel the casino, because either that or they've got to go and look for those players themselves. And so that differentiates us. The other thing is, running a casino is not for the faint-hearted. We have somewhere around 7 or 8 million players on our systems. We have, at any one time, we could have 500,000 people simultaneously playing on our platforms. And this is it's a big task, because the actual items that we're delivering, as in the content, the actual games, are very heavy. The images are heavy because we have to carry these images to the end user, and it may seem as if you can just get up a casino and maintain 1 million players simultaneously, and it's not an easy task. But in the industry, we're also known to have a stable system, somebody that they can rely on, and also the data protection, because a person's value that's running a casino comes down to their players, and the worst thing that can happen is their data gets compromised, or they lose those players, and so our reputation differentiates us in a lot of instances, that we've been there, done that. We don't just talk about it, we run it, and we provide the best of the best in terms of content. We provide all the world's best gaming content as a portfolio. And in terms of the company, we run these operations in a way for these operators. We help them, we train them, and then we support them with the content, and we have an ability to bring content to them. We never force the content on them, but it's a pipeline for us. So a lot of people come to us and say, please, can you take on our games and put it into your system? And we look at the games. If they're of the suitable quality, we can force it down the pipeline into these operating entities, but we generally approach the operator and sell it to him rather than force it. But it is as if we have supermarket shelves that we can populate with product. If we need to, not that we do, like I say, we generally would rather sell it than push it down, but it's a very valuable thing. We don't own the players because they're not our players, they belong to the operator, but we have the attention, we have the pipeline, and we can push things down the pipeline and market the games, and so it's that's something that's very valuable.
All right, now you're in over 15 regulated markets. How do you think about geographic expansion, and do you have a potential US strategy?
Maybe I'll hand it over to Zoran, because he could answer that better than I.
Yeah, so basically our revenue split in terms of markets geographically is approximately 60% comes from Europe, 30% comes from Africa, and 10% comes from Latin America. So this is geographical split, and what we are busy with, we are in the process of acquisition, as I said, trying to acquire existing B2B operators in these jurisdictions, dominantly in Europe and in Africa. And these continents are something what is our part of our organic strategy, and what we'll continue to to strengthen all the positions in the existing markets and acquire existing B2B operators and turn them into B2C to achieve higher profitability, larger revenues. When our next target, what we are very busy with is obviously Brazil. This is the hottest topic currently in the industry, and we've done a lot in terms of administrative issues which are needed to get a license. We are expecting license to be issued. Actually, the licensing process to start in next few weeks. And of course, we are considering US, which obviously I cannot talk much about it, but definitely B2B strategy is more suitable for US currently, and there is a very good momentum for B2B, and we expect at the end of this year to officially start to promote our B2B product.
Great. How is technology a differentiator for the combined company? Either one of you.
This is a great question. Believe it or not, there is only few companies in the market that actually are making their own software. When it comes to sports betting, you can say that globally you have approximately 150 companies. Let's say that are medium-sized or big companies. Out of 150 companies, 150 recognizable companies, maybe just 5% of them are making their own software. So 95% are actually outsourcing it, taking from the third parties. So this is a huge opportunity for us. And as I said, Meridian was up to 5-6 years ago quite big in B2B segment. And one of our plans of growth is to expand again and restart our B2B processes and efforts. 95% of sports betting companies are our potential targets. And that market is quite huge. It's dramatically changing. Meridian has completely new software and completely new technology made from the scratch, which is now in process of release. And we expect a lot of it. And what is very unique when it comes to Meridian, and nobody does that, is that we are a real franchise for sports betting business. So it's and casinos as well. So it's a turnkey solution. And comparing to our competitors, if you carefully read their contract and what they're actually delivering, is that they're licensing software, nothing else. But Meridian is like a McDonald's for sports betting and for casinos. So it's full turnkey solution, and we deliver every segment and every aspect of your business you can get into in the package, because we want the companies that are taking software from us also to operate on every single level and every single department like a Meridian company, because that is only assurance for high profitability and success of that operation. Because we cannot allow that somebody takes our software and misuse it and doesn't have enough people that are trained to use it properly. But also what we find out over the years, if other departments in the company, from logistics department, legal department, financial department, don't behave in the same manner, we have a very good chance to fail, and we don't want to fail. So we are insisting for all our clients to get a full franchise. So we are quite confident that the operation will run successfully. To be honest, in our history, we don't have any history that somebody failed, lost money. So everybody made money. It's just a question what amount of money, historically speaking. And that is our unique approach, which you won't find at all with anyone else. Anyone else is just busy with selling software. That's it. We don't sell software.
I like the McDonald's analogy. How is the regulatory environment impacting your business, since you're in so many different markets?
Yeah, it's changing a lot, and the rate of change is really great. And one of the reasons why we actually were working for years, last several years, is to become public company, is to be able to absorb regulatory pressures much easier, because regulatory pressures are getting higher and higher, and we want to turn that into our advantage, not to fight against it. It's actually to comply with it and use it as our tool, as our competitive tool. And one of the strategies which we wanted to use is to become public company, because public company can deal with the regulators much than a privately owned company. And especially in the regions where we operate, we think that in 5 to 10 years, all companies will be public companies. You will not be able to operate. It will be almost very, very difficult. Like in US, if you analyze, almost every single gaming company is public company. So that is happening in Europe. Europe is, let's say, 50-50. In the regions where we operate, it's very few. So it's maybe 10% are publicly owned companies, but definitely that markets will see transformation in years to come in that segment.
Great. And Brian, what are the company's growth avenues across its products?
So as I mentioned, we have very strong core growth, if that's what you want to call it, from our core products. And but at the end of the day, we want to scale fairly quickly. There's a lot of opportunity out there. There's a lot of acquisition opportunities that are potentially, call them smaller opportunities, but synergistic to our operation. And right now, we're looking at multiple opportunities, and we will move on these in the short term and bring them in house, and each one of them will add to what we do. And so that's the way we'll grow. As Zoran mentioned, we talk about developing countries or developing markets. Developing should not be confused with small, because Brazil is a developing market. Developing is generally, in gaming terms right now, is markets that are becoming regulated or have recently become regulated. And in terms of Brazil, it's now recognized as one of the largest gaming markets in the world. So we will be one of the few, we believe, licensed operations in that territory. And even though it's a developing market, it's a substantial market, and what it'll bring to our bottom line and to our revenues will be substantial. And we, like I say, if I told you, a few years ago that I was going to be on NASDAQ, you would have thought I would lost my mind. But when I tell you that we're going to be a multi-billion-dollar company, and we're going to grow this thing through our core business as well as our through acquisitions and moving into other territories, you may look at me a little strangely, but when we revisit somewhere down the track and you see something different, you'll notice. You asked me a question and I answered you on the basis of what the revenues and profitability is, but that was a question directly related to Golden Matrix. When you ask the question and it relates to now the pro forma companies, and it's nothing that the market doesn't know about because we've cleansed a document that's been published. We're talking north of 100 and whatever million in revenues, and just under 30 million in EBITDA is what we're projecting, and those numbers will become available shortly in the form of we call it a Super 8K, but it's an 8K filing post acquisition, which will be available shortly to the market, and people will then be able to see the exact numbers for themselves. But we've already, this acquisition has been a transformational change. And, we were a micro cap, like I say, we were about 100 million in market cap. Right now, we've moved up to a 500 and something. I haven't looked at the price today, but we moved up to about a $540 million market cap. I'm guessing because we haven't seen the list yet, we'll make the Russell Index. ETFs will be bound to buy into the stock. And so there's a lot of real positive things happening, both on the financial front, on the business front, on our strategy, and all very exciting. And it's a sort of a journey, and I'm sure we're going to be speaking along the way, and we'll readdress this. But yeah, that's our positioning on growing this company.
Well, we look forward to having you back on the program in the future. I want to bring John back into the conversation. And of course, we see those questions in the queue. There's some great ones lined up. So we'll be sure to get to those. John?
Oh, sorry, I was muted. Thanks a lot, Jarrett. All right, let's. So I've got some questions myself, having written about this company. But let's jump into the first one here from Steve. He's asking, in the last month or so since the acquisition was closed, what have you guys learned from each other, and how are you becoming a stronger company now that you're teamed up?
Well, I think we're still on honeymoon. So, but in answer to that question, we've been with each other for, I think, more than 18 months, and we've been working closely all along. The acquisition may not have closed for that period of time because we had a few hurdles to jump. We had to get through the SEC, we had to get through NASDAQ. So we had our work cut out for us, but we've been working closely all along the way. And the synergies are not only in terms of products and opportunities and cost savings and all of those lovely items that will help the business and bring a better bottom line and bigger revenues. The synergies are in terms of culture as well, and culturally we may be from different parts of the world, but the reason we came together, one of the major reasons is because we liked each other and we thought it would be a good match. But culturally, we operate in a similar fashion. We're very conservative when it comes to expenditure. We're conservative in that we don't use other people's money. We've never taken on debt. We've always delivered value to our shareholders. And Zoran's group, as he mentioned earlier on, has never been to a bank to ask for money, used other people's money. We have delivered free cash and used our own resources to build these companies, and it's unusual in this industry. But in cultural terms, we're not living in fancy hotels and flying private jets and whatever else. Our focus is on building a very powerful, well-regarded business, and ultimately, I keep on saying, delivering value to shareholders, but not forgetting that we are shareholders ourselves, and we take very little from the company in terms of compensation in cash terms, and we back ourselves. We've always backed ourselves, and we've always delivered. Whatever we've set out to deliver, the market has looked at us, like I say, and said, wow, when is this uplisting going to happen? When is this acquisition going to happen? But whatever we set out to do, we've delivered. And I think that people will look at us. They do look at us because we speak to people all the day and all the time. And they look at us and say, yeah, you know what? These guys said they were going to do that, and they have. They've delivered, and they will deliver. And that's where we get our support. And that will reflect in the stock price, and it'll reflect in the results of the business.
Great, Brian. I just want to reinforce this point about your financial discipline. As Zoran was explaining to me in the green room here before we started, banks traditionally don't like to lend to businesses like this. It's not like there's anything wrong with you guys, but even if you wanted to, is that correct? That they don't. It's a little tricky to get bank financing.
Well, I think from my side, I'll quickly cover that. I'll hand it over to Zoran. But from our side, you can get financing, but it's toxic in most terms. And so when you take on financing at an early stage, generally that financing is toxic. It has a spiral of toxicity to the share price, and we've been very careful in not taking money from somebody that could potentially hurt the shareholders, and so I'll hand it over to Zoran. In terms of actually going to banks, we've never dealt with it at that level.
Yeah, before this merger happened, we never had any credit and any particular business with the banks in terms of financing, investing, and so on. Because banks in Europe traditionally are very conservative when it comes to gaming business. So basically, you're forced to work without financing, external financing, especially if you compare it with something what we can see in US. So it's a completely different level than than Europe. So traditionally, we'll be operating with our own money, expanding with our financing. So we had to fight on two fronts. So on one front, you need to maintain the growth, and you need to enter new markets and to do a lot of investments. But on the other front, you need to have huge profitability rate and a lot of profits, because, as I said, we are investing our own money. So in order to invest, I need to earn it before. Which is very, very untraditional comparing to a situation in US. But over the years, and especially over the decades, actually, it turned to be some of our advantage. And now we are one of the most profitable companies out there.
Great. Now, gentlemen, we've spent a lot of time talking about the B2B e-gaming side of the business, but you guys also operate, you have a physical footprint. And for some of the American viewers, they might not be familiar with this. When I was in London, I remember seeing William Hill, things like that, but we don't have that. Maybe, Brian, can you just explain to our viewers how that works?
I think it's a Zoran question, because it's
Okay.
these retail outlets, we call them retail stores, but Zoran will put some color on what they are.
Yeah, this is like a huge business still in Europe. You have the oldest organized betting business is in UK, which is always over 140 years old, and everything started in the shops. Those shops are still out there, and the easiest thing how to describe it from American perspective is, let's imagine, so most of them look like a Starbucks. So imagine Starbucks only with 10 screens inside. On the screens you can see prices and live matches next to each other. So if you have a live match of some sports event is happening, next to it you have a screen displaying the current price on that match. And more or less that's it. You can drink coffee, you can sit. There is no huge investments when it comes to shop itself, especially the last several years. And that's it. In some jurisdictions, you can have additionally in the betting shop, you can have slot machines as well. But that really depends from jurisdiction to jurisdiction. But let's say Starbucks with 10, 20 screens where you can watch the match and place a bet on the counter, but nothing different than a Starbucks.
Gotcha. There's a question here from William. I want to clear the air on this. I think there's a Morningstar number that might be a little misleading. So, William, I would just advise you check out the company's investor presentation. The company is very profitable, so I don't know what that number is. Guys, I also want to ask about your M&A strategy. Viewers might have noticed the stock has risen tremendously actually in the last month here. Does that make you more inclined, and either of you can take this, if you're looking at M&A, to use shares, or is cash still going to be part of the currency too?
So I think it's an approach that both companies have taken, and it's one of our cultural similarities in that if we were and we are going to buy anything, it would be a combination of cash, stock, and it would be some form of an earnout. We would not, generally buy anything from people that are not prepared to back themselves. And it's so it comes down to that. It would be a portion in potential cash. The more stock we can use, the better, because not only does it not eat into our cash reserves, it puts the people in a position where they're part of the team, and keeps on going back to culture. But the culture of all of our staff is that they feel they are partners in the business. I don't have a staff member, I don't think, in my office that doesn't have some stock. Some options, some RSUs, whatever it may be, and they feel that the business is theirs, and they come to work in the morning, and their whole outlook is to see that the business does well, and even the business I mentioned with the motor vehicles and the raffle ticket business, all of those people, they're incentivized, and they have a stock, and I think it's a very a critical part of what we do. And I'll hand it over to Zoran, because Meridian has a particular methodology how they acquire businesses and how we will grow our business as well.
Yeah, just to confirm what you asked, every single acquisition is more shares than cash, because we are acquiring our existing partners. So these are the partners which are already in business with. They want to continue, they want to stay in the company, and most of them want shares. And actually, we don't make business with the people that want to have exit. We are not exiting, as Brian said. We are all shareholders, and we don't intend to stop in terms of that. So we are always looking for this kind of partners, and in most of jurisdictions where we operate, almost all of them, we have local partners. And local partner, we are not getting engaged with anyone that wants to exit. That's.
Boy, we've got so many questions here. We're going to try to get through them all before that time. Here's one from Andy. This is kind of a big picture question, Brian or Zoran, regarding opportunities for organic and inorganic growth. What's most important to you in the near term? So is it going into new jurisdictions organically, acquisitions? What's at the top of the list?
I'll get Zoran to start with that if he doesn't mind.
Yeah, definitely expanding our market position in the existing territories will bring us the biggest effect in the short term, of course, and also acquiring existing B2B partners, because then currently, if we have a B2B partner, our revenue is actually the fee which he pays to us because of he's using our franchise. But once we acquire him, his revenue becomes our revenue. And that can have a huge impact in the short term. So that is what we are busy with in 2024 and 2025. It's a parallel process. Entering new markets from the short term perspective doesn't bring much revenues like Brazil. So Brazil is something what is like it will be probably the best gaming market in the world. Especially as Brian mentioned, there is only you have federal license comparing to US. So federal with one license you can target the whole Brazil, which you cannot do in US. In US you need to have 50 licenses in order to target the whole US eventually. Entering markets like Brazil is something what will have a significant impact, but in the long term that means like 3+ years. But in first year don't expect much. What we are busy with is not to lose any money and to maintain at least break even month by month in the beginning, and then to accumulate profits in the long run, which most of our competitors will just burn money in the beginning.
Great.
So we are quite busy with different strategies how to approach Brazil and so on. But all these big markets, nothing in the short term.
Great. Yeah, yet another indication of your financial discipline there, Zoran. Let's take this one here. The biggest two letters on Wall Street right now are AI. And someone here, Mark, is asking, can you just explain how you use AI? Does it help you predict sports outcomes? I don't think that's what you're doing with it. Can you explain how it works?
Yeah, so every company as Meridian has its own department. It's playing around with all possibilities. So currently the usage is in of course customer support. So we are developing AI bots to help our customer support experience, and this is something what is in the production, and we are just expanding into multiple channels because we are building that for every single customer support channel. Meridian wants to have support in every single channel possible, from WhatsApp, Facebook, our own core software. So every single messaging app is potentially customer support, and people use it more and more. So you need to develop AI chatbot for every single one of them differently. That is one way. So customer support. Second is recommender systems. So within casino and betting section on the site or the app, you have a recommendation system which are getting better and better, and there is some machine learning functionality behind it. And also what Meridian is quite good at, we are making our own trading through AI as well. So especially, let's say, live betting trading, we are able to take external feed, and based on external action details, let's say we are just getting details about which team is attacking, which team is on defense, yellow card, red card, foul, goal, and so on. And based on the action details, our system through sophisticated algorithms has ability to deliver the price to a particular customer and to maximize the profitability which we can achieve through that. So there are a lot of areas we're busy. Also, from some standard activities in the company, designers are using AI more and more in terms of how much visuals you can deliver daily and so on. But this is basically used to some increase the productivity in the company between different departments.
Great. Someone's asking whether or not you do or intend to allow the punters to use cryptocurrency. How do you look at that?
It really depends from the regulator. So we've been analyzing that a lot, and only 2 jurisdictions are currently allowing this in Europe, but still not a single one. Even if there is a regulatory framework, it's still not live. So gaming regulatory are not issuing license still about it. So regulatory environment is quite careful about it. And we are just analyzing what regulatory framework, how they will handle that, and we will definitely adopt. But the plan of the company is to go into that. That's for sure. And we have a lot of business models that we developed how it can actually work. But as I said, everything depends from regulatory framework. And good thing is 2 countries already regulated, but there are no licenses still issued.
Gotcha. This is a fair question here from Mark. We were talking about the employees for the most part being shareholders, but is there a flip side to that? Is there any concern that someone would sell a lot of shares and negatively impact the share price? So I guess the question is, how can we be assured that the insiders are long-term shareholders? I mean, maybe you can just tell me you are, Brian and Zoran. I don't know.
Yeah. So I mean, obviously, any type of stock incentive plan comes with a whole load of restrictions. The first item is that an RSU is not a share. It only becomes a share when it vests, and obviously the vesting part of it is in different circumstances, either based on achievement or it's based on time. And in a time-based qualification, yeah, that's the way we keep the staff, and we roll these RSUs so that they stay. The longer they stay, the more they get. And so at some stage they're going to get some stock, but it's spread out over a long period of time. And to be honest, in our experience, like I say, we got staff that came from 4 cents. Now they're sitting on a whole load of money. They could probably buy themselves a house if they wanted to. But at the end of the day, the other restriction is their blackout periods. You can't just sell your stock when you want to sell it. If you want to sell something and you're a person that could be classified either as an affiliate or an insider, you would need to register a 10b5 plan. The stock would need to be bled out at a particular rate. Those rates are based on the liquidity of the market. There's a whole load of restrictions, and in fact, those blackout periods are quite extensive. So they generally 15 days before the quarter ends, and then 48 hours after you file. I mean, and all of these restrictions. So it's not as if the staff member can wake up one morning and dump all his stock in the market. Hopefully one day in the future, if we do a capital raise or something along those lines, we'll allow management and staff to participate in some way, that stock is a private sale rather than an off-market sale, rather than something on the market. But there is a fine balance. You can't stop people from selling their stock, but we manage it very carefully, and you won't see people dumping stock as in your question there.
Gotcha. Good answer there, Brian. In some markets, so this is another one from Mark here. He's mentioning Brazil has a pretty hefty license fee, but from what I understand, Zoran, you guys try to be cash flow positive in every jurisdiction, right? So you wouldn't be there if it was too expensive. Is that correct?
Yeah, the question is excellent. Actually, the cost of the license is approximately 5 million, but under one license, 3 brands can work. So we already have 2 brands that will go with us. So cost of our license will be less than 1.7 million. in the first year, which we can be in break even. That's for sure in the first year. So that is one of good things in Brazil as well. So three brands under one license, paying 5 million, and we split that cost on a three.
Makes sense. Now, we talked about the U.S. a little bit earlier, Zoran, but someone's asking, what are your ambitions here? Would you be focused entirely on B2B? Because the retail side looks very competitive.
Yeah, in near term B2B, and we are just waiting for. We are in busy with few regulatory activities, and once we get regulatory approval, we will start with promotions of B2B products in near term. In long term, of course, B2C is something what we are looking at as well, but in near term, just B2B.
Great. I think we got time for one more of these questions. Actually, two people asked a similar question. Tell us about your long-term vision. I mean, you don't need to give financial projections, but where do you see this company 10 years down the road? I mean, Brian, I think you touched on this a bit earlier. You know, you want to be a multi-billion-dollar business. Can you just tell us about your dreams?
So yeah, it's a target rather than dreams, because I could be dreaming, but I wouldn't like people to think I'm dreaming, because whatever we've set out to do, we've accomplished, and we have a plan, we have a strategy, and this is a well thought out strategy, and effectively we will grow this company into a multi-billion-dollar company is our strategy, but yeah, it's that's pretty much, you know, where we're at, and we've discussed a lot of how we're going to get to that stage, and you know, it's performance, it's delivery, and it's profitability, and bottom line is shareholder value, and we our history shows that we care about the shareholder, you know, and the investors, and we'll get there. So that's really, and the other thing that we haven't really discussed is we could, and we believe we are a potential target for a bigger organization. So we haven't gone down that road, but right now, without mentioning names, the big end of town in the US is focused on the US because it's a fight, you know, that nobody's ever seen in terms of market share. People are spending huge amounts of money, you know, to maintain or to gain market share, and to get these businesses turned around that are burning, you know, billions of dollars historically. Ultimately, they'll get the market share that they're looking for, and they'll turn them to profitability. But then they'll start looking to expand their businesses into other parts of the world. They won't stay concentrated in the US for, I don't think, forever. And when that happens, we don't believe that there's any chance of them trying to start operations in other parts of the world from the ground up. It's never going to happen. They're going to look to acquire things. And I think that at this stage, we wouldn't be a seller anyway, but at that stage, we will have a whole load of markets, you know, around the world that we have podium positions in, that they will look to grab, and that's just by one acquisition will give them, you know, somehow the best technology available, because it takes care of all those different compliances, and they'll step into a whole new world, and when that happens, that'll be very valuable for everybody that's with us.
Wow, well, that was a surprise there, Brian. Good answer. Zoran, do you have anything to add to that? I mean, I think that was a terrific response.
Yeah, nothing to add, just to support it. And basically, I don't see anything holding us back to become greatest gaming company in 10 years from now. So if you look at our business model, you won't find any similar company that is doing the same thing. Licensed in 17 jurisdictions, operating in B2C and B2B mode, both of them successful, both of them profitable, making our own sports betting, casino, and casino aggregation technology. There is not a single company doing like this, creating our own games, having our own raffle business, all of them successful. Just by expanding existing market share, we can become that. Not mentioning entering new markets. And as I said, the foundation is there. And what we need is just larger distribution and increase existing market share. That's it. We don't need to do anything, build anything. It's already built. Software, and so it's only up to us, our creativity, our will to move forward. And that's it. And as I said, as Brian said, very few people actually hold like 80-90% of the shares of the company, and nobody wants to leave. Everybody wants to stay and just continue.
All right. Well, that hour really flew by. We covered so much ground. I want to thank both of you, Brian and Zoran, and also, of course, our audience, especially those of you who asked questions. We're going to leave it there. Once again, you can just look up the stock ticker on your Bloomberg terminal or on Yahoo Finance, or go to ipoedge.com for the replay, which we'll have up this afternoon, and some highlights as well. So, gentlemen, thanks so much. This has been a terrific session.
Thank you.
Thank you, John and Jarrett. And we shall talk soon. Hopefully, we get to have another session, and appreciate your time.
Great. Okay. Thanks, everyone.
Thank you.
Bye.
Bye.